Hey, good evening. It is December 17th. The market has closed for a few hours, and I am here to talk about stocks. I'm here to analyze some stocks to see if companies are being sold at fair price, if stocks are being sold at a discount or at a premium. In this channel, I analyze stocks based on their future free cash flows and try to discount those cash flows to today's value. I really like high growth companies, companies that are growing, making themselves bigger, making themselves more valuable. I also look at profits and see how that company is going to generate profits and what those are worth. Trying to get to an intrinsic value for that business. Intrinsic value is the net present value of those future cash flows, of those future profits. And I have a model that I've created that exactly calculates that. And that's part of my research of a company. That's what I aim to do in this live stream is take a look at companies and try to get to what I think is a fair price to see if this market's selling the stock at a price that's too high or selling a stock at a price that's too low, and it is an opportunity. Now, today the market sold off some stocks, sold off Nvidia, sold off Broadcom, Micron, which announced after the market closed, Palantir, other stocks in the infrastructure support industry. Google sold off harshly, down 3.2%. Tesla was down 4.6%. Whew. Now, there is a rotation going on. We're seeing investors sell some of their data center, cloud infrastructure, semiconductor companies and go into some software stocks, go into some financials, go into financials and invest in Berkshire or BlackRock, Chubb Insurance, or maybe some Home Depot, some Lowe's, some lodging. Or they're going into staples, good old staples. When things start falling apart, investors rush over to buy some Proctor and Gamble or some Coca-Cola. Now we had some news, some international tensions are brewing between Venezuela, the US, and the US, I believe the president is going to be speaking tonight. And I believe the principal topic is why he's taking action against Venezuela. I believe the US is going to have some kind of blockade to prevent oil from being shipped from Venezuela because there's an embargo on Venezuela. So that created some concern in the oil markets. It drove up oil prices, and that's why Exxon is up 2.38, and the rest of the energy sector is up, especially the smaller energy producers. Man, they were up a lot. I noticed that they were really flying high. Looks like materials is catching a bid. If you're an advanced member or a super investor member or a platinum investor member, I released a video less than an hour ago covering the best and worst material stocks that I could invest in at this time. And hopefully you get a chance to see that. And in 30 days, I'll release it to the public. Looks like Genetic Smite. Very good to see you. I hope you're doing well. It's been a little bit of a small correction. Can't call it a correction yet. We haven't gone down 10%. But boy, some of these stocks are down more than 10%. It's pretty red out there, huh? For the 1 week heat map. And you see the rotations pretty clear where you have pretty good sell-off in semiconductor. Google. Now, Google's doing great for call it the last 12 months. But more recently, the 1 week, it's given up 7% of its stock price. And a lot of these gave up pretty good amounts. And that money has ended up at Visa, MasterCard, JP Morgan, Wells Fargo. It's going over to McDonald's, Home Depot, Progressive. All these stocks are catching a bid. That looks good. And Netflix, I don't want to talk about Netflix. That's a little bit of a dumpster fire right now. I don't know what to say about it. Walmart, a lot of people buying Walmart. Procter and Gamble up 5.7% in the 1 week. Very good. Healthcare. Now, there is a story out there that I should talk about, which is that right now in the House of Representatives, the Congress, they are going to have a vote to see if they want to bring back the subsidies on healthcare. That a lot of people are set to lose that subsidy at the beginning of 2026, and that is not going to be popular. A lot of people are going to be angry if their health insurance costs a lot more to buy. So a lot of representatives want to have a vote to see if they could keep those subsidies going for another 3 years. And if that happens, you better believe this space is going to catch a nice rally. So we'll keep an eye on that story, because if that story happens, I think this whole space is going to light up green. So it's good to see this rotation. This rotation is not all bad news. Of course, if you're a, investor in one of these companies, how could it not be some bad news, right? I agree. But it has been a place where we have just seen awesome returns. So for some of that money, some of that capital rotate into some of these other sectors is going to balance out the market a bit, just a little bit. We're nowhere near balancing out. Geez, look how big these boxes are. The bigger the box, the higher the market cap. Nvidia was no more than not even 300 billion in 2022 in market cap. Now they're 4 point something trillion. These businesses have gotten so valuable. Meanwhile, a lot of these other businesses that are good businesses have just kind of stayed near their valuations that they were trading at 3 years ago. So maybe some of that capital needs to go looking for a better rate of appreciation, lower risk, better discounts on those stocks. I think that's what capital's trying to do. Investors like you and me, we're always trying to adjust to outperform the market. We're trying to figure out what's going to work for 2026, what's going to be a really good stock. And I've picked out some gems out of each industry. I share them with the community of members. I share them with you guys as well. And it's an interesting time for sure. Genetics smite. It is absolutely an interesting time. Now, it is a time when we're having a little bit of a sell-off. The S&P is down a little bit. If we look at the 5-day, it's down 2.53% over the 5-day. That's not a correction. We got to go down 10% to call it a correction. But we're kind of, we're getting there. We are getting there. You can see that the market's done really well, especially after Liberation Day. It's just flourished. For the year, S&P is up 14%. We have this continued correction, and what I'd be curious to see is the 1 month. The 1 month is still positive on the S&P. It's up 0.73%. All right. That's pretty good. 6 months, see that 12.35%. That looks really good. Year to date looks good, and the 1 year, 11% over 1 year. So we got a little bit of a sell-off. Can't call it a correction yet. Eventually, will it be a correction? Maybe. I'm willing. At the beginning of December, I thought, we're probably going to see a rally month, because I know November was kind of a negative month. We had some pretty good sell-offs in stocks like Nvidia and others. So I thought, hey, we let some of the air out of the balloon, so to speak. We let some air out of the bubble, would be better stated. And I think we got better stock prices. Well, if we keep selling off like this, it keeps creating more opportunity. And I'll continue to look for it. A couple of stocks that I wanted to take a look at. I've got two on my list, Coin and Micron. But what stock do you want to look at? If you're a member, just pop it in the chat. I will take a look at it. If you're not a member, no big deal. You just buy a super chat, $5, and I'll take a look at your stock. If you're interested, you can visit the homepage of my YouTube channel, or you can check out this link that's in the chat and you can become a member. And if you're a member of any level and you come on the stream, like Benton just asked for RKT, and I will take a look at the stock. So getting signed up is easy. Other people have signed up on the fly. So take a look. Take a look. So Benton, thanks for joining. Good to see you. I hope you're doing well. We're going to look at RKT. And what is RKT? Rocket companies. That should be interesting. These guys do mortgage, lending, real estate, personal finance. Perfect. I'd like to look at them because I think the lower interest rates are probably going to help these guys a lot. So let me get through Coinbase and some comments on Micron. Then we're going to hit Rocket. And Shadow Guy. Shadow Guy's bringing up MDLN. Is that the Medline, the new IPO? Up 41%. Man, up 41%. What do these guys do? Medline manufactures medical surgical products serving the hospital, surgery centers, physician offices, post-acute facilities, and nursing home sites of care in the United States and internationally. Yeah, I heard a small description of these guys. What's interesting is that this is not a new business. They have been around for a long time. I believe it was a family-owned business, and they more recently were acquired by a private equity group that took them and got them ready, and then here it is, the IPO. So it looks like the IPO was successful. If it was up 41%, that's a pretty good appreciation. If we look at, let's see here. So they do advanced wound care, apparel, diagnostics, equipment furnishings. So this is all medical equipment and so forth. So that's great to see that an IPO came out. It was successful. I stay away from IPOs. It's just, it's risky. It could be a terrific business. It starts off expensive and then it sells off. So, so I'd rather just stay away. Maybe in about a year's time, we can take a look. And one of the reasons that they're risky is you don't have a lot of data. You don't have a lot of good financial data. It looks like these guys have a couple years now publicly available. Revenue growth looks pretty decent, 10%. It's a pretty good number, right? You got $25.5 billion in revenue for the last full year. They don't have a quarterly yet, and that's part of my risk, right? Is I just don't get as much information from these guys. They haven't been asked a lot of questions either. When you go public, you have to answer a lot of questions on your earnings call and so forth. So these guys, I'll let them kind of operate for a while, maybe a year or longer, and then I'll see if I'm interested in investing. For now, I'll just let it do its thing. I'll let other people invest in it. $55 billion market cap, P ratio of 40 for the current year. And we'll see. Interesting that it came out. Thanks for bringing that up, Shadow Guy. And Genetic Smite. TPL. Yeah, we can cover TPL. TPL. Take a look at it. See if we can evaluate it, analyze it, make sense of it. Yeah, I think you're referring to Rocket. Lower interest rates will help them because people will want to refinance. Like, oh, I got a loan a couple years ago. I'm paying 7.5% on my mortgage. If I can get 6%, that would save me monthly a good amount. And over the life of a loan, it could save a lot of money. So it makes a lot of sense. People are really compelled to do that. And I think the mortgage lenders are really active right now because of those low interest rates. Yeah, you could say that. They treat them like rental properties because they want to extract value, right? They don't buy these businesses because they think, hey, we're gonna buy the business and we're gonna, you know, help them develop new products and so forth. Nope. They want to buy a business kind of like a property, maybe make a few changes, make it look better, and then IPO and have an exit strategy and make money. That is their model. Real estate was up today. That makes sense. Totally makes sense. All right. And I'll put in the chat, if you sign up to stock analysis, use my discount code, you get 10% off. And I put that in the chat, by the way. All right, let's keep rolling here. We got a nice little list going here. And I wanted to take a look at Coinbase. The news that came out that compels me to look at them is that they have announced that they want to get into the whole prediction markets space. I'm not seeing the article here, but let's go over to the website and see if we can read a press release on their announcement, because I saw it on CNBC. And I think this is going to probably be it. It's a webcast, so that's where they probably announced it, is on. Nope. Didn't hit pay dirt there. So let me just go to the source where I saw the article. So Coinbase adds prediction markets and stock trading in push to be one-stop trading app. So Coinbase and Robinhood are going to be competitors. I own both stocks. Robinhood has just been an awesome stock to own. Coinbase has been a good stock to own. Coinbase definitely has, its whole legacy is crypto. It does a lot of institutional services that we don't really see all that much, but when you see, especially the traditional brokerages offering crypto, they're usually working with Coinbase that provides a lot of that. Coinbase provides a lot of the crypto, storage for them. They're providing a lot of services. That's where they began. It looks like they're going to go into prediction markets. Okay. I don't know that Coinbase has. Maybe they do. So maybe they I know Robinhood does have a pretty popular brand with the public. Coinbase does have a lot of users, but I don't know that it's at the same level as Robinhood. But that's what they're going to do. Exciting. I think it's an exciting piece of news. I think it's going to help the stock. So when you want to place a bet, you can go on Robinhood, Coinbase. Of course, you can go on DraftKings. But I think DraftKings is kind of getting squeezed here. You got new generation of placing bets through these prediction markets, and it's taking, I think, some dollars away from, DraftKings. DraftKings used to be the place where if you wanted to bet, you'd go on DraftKings. Hey, I want to bet on the football game tomorrow. The Rams against the Seahawks. That's going to be a big game. They have identical records. The winner of that game is probably going to be in a good spot to win the division. So that's going to be a big game. Well, you can bet on Robinhood. You can bet on Kalshi. You can bet on Polymarket. And of course, you can bet on DraftKings, but DraftKings has just been getting hammered. Let's take a look at that stock so I could show you what I'm talking about. And this is a story, right? DraftKings is getting run over by this story. Looks like they're down 8.47, and they have been growing. We'll look at their revenue growth in a little bit, but this is the story that's been kind of ailing the stock. Is investors are afraid that are these prediction markets going to take a lot of their market share? DraftKings is 17 billion in market cap, revenue of 5.46 billion. They do have a little bit of profit. And when we look at their historical growth, they've been a good growing company. That's terrific growth. Looks good historically. But you see here, this is part of the problem here is you can't slow down because then you're feeding that story that, hey, Kalshi and Polymarket are going to take your market. If you slow down like that, it's like, oh, you're reinforcing that narrative. So that is interesting there. The gross margins are not terrific. They will at some point turn a profit. Cash flow looks okay. 12% yield on cash flow is pretty good. Pretty good. Not great, pretty good. And they keep getting bigger. As they get bigger, they'll make more money. So yeah, DraftKings, man, they didn't see this coming. It's running them over. DraftKings took a path to be licensed and legally be able to allow people to bet online. They went through every state requires that, you get, in essence, a license to operate this gambling site or sports betting site. And they went through that route where Kalshi Polymarket and now Robinhood uses Kalshi as kind of like their back end or however they do it. I don't know what Coinbase is going to use, but those guys took a different route, which was the same laws that apply to stock option trading. Because when you buy an option, you're buying a contract. You're saying, hey, I would like to buy a call option on Nvidia. That's a contract. And there's federal policy or regulation there that once you get licensed to do that, you can do it in all states. Bingo. That's what Kalshi and Polymarket did. And it kind of gives them far more flexibility. They're not treated like gambling sites. They're treated like investment companies that are selling contracts. In this case, a contract that could be simple and it could be a topic that's going on, right? You guys know Polymarket. It could be just the Fed decision. Who's going to win in this boxing match? Is, Taylor Swift going to be pregnant in 2026? That kind of thing. When's the wedding going to happen? All that, fun stuff to track. When it comes to finance, they do earnings. Here it is. It is kind of neat to look at Polymarket. Micron. You could have looked and seen what's the expectation. Are they going to beat earnings or not? In this case here, Nike announces tomorrow. Most people that are buying a contract and placing a wager, 90% of them think they're going to beat. FedEx, 93. KB Homes, not a lot of confidence there. That one can go either way. 47%. So that one there, KB, it's like a coin flip. Who knows? So you could see that, as this gets more active, we're going to be able to see where is anything, at least the participants, the public that uses Polymarket likes betting on whether they're going to beat or not beat earnings. You could see, hey, where's the market's head? Where's the sentiment? Confident or not confident? Like in this case here, not confident. Nike, that's pretty confident, 90%. Nike's probably going to beat. So that'll be interesting to see tomorrow. Nike, I'll probably do a video on that. I think some things are setting up next year that will be good for Nike. I heard that there may be a stimulus, round coming out. The president may do that with all the tariff money that was collected. How do you return it back? He's thinking, well, it would be popular to give everybody a check, right? Yeah, it would be. And if they do that, I bet you a lot of people are going to get that stimulus money and go buy a pair of Nikes and other consumer discretionary products. I think consumer discretionary is going to get a little bit of a tailwind if that happens. FedEx, look at that. They're supposed to beat. That'll be interesting. I'll be reviewing FedEx and Nike tomorrow. Tonight, we're going to look at Micron. So Coinbase is making themselves more interesting. I'm glad. I think that's a good move. If they get into, here it is. So Coinbase joins with Kalshi to enter the surging prediction markets business. So this here is an FYI. Kalshi uses, well, let's ask Gemini. All right. So Gemini, what crypto coin does Kalshi use? I think they use a cryptocurrency. So here it is. So they tokenize a lot of these contracts, and I believe they use Solana. So they use Solana tokens. So Kalshi and some of these new companies are building themselves on the crypto rails. That's interesting to see, like businesses that are brand new businesses, they're setting themselves up to be future proof. Yeah, it's mostly Solana. Very cool. How interesting, man. That's going to be cool. All right. So Coinbase, I'm a stockholder. I totally approve, and I'm glad you're doing this. I really like the leadership at Coinbase, by the way. Armstrong is solid, very solid. And the stock, this is why I avoid IPOs. Stock comes out, it's like, all right, everybody wants it, everybody loves it, and then it sells off. So if you wait, you can buy the stock at a better price, and it's just better, right? You make more money. You buy at a lower price, and shazam, stocks really performed from end of 2022 to this point. It went from 35 to, we're now trading at $244. So that's why I stay away from IPOs. Even a business that I do think is interesting and cool, like Coinbase, it had a pretty severe sell-off, and I just don't want to be caught up with that. So that's an example of why I stay away from IPOs, even with businesses that I really like. So go Coinbase. Good news for me. And I like what I'm hearing. I like what I'm seeing. All right. So Micron, big semiconductor company, and the stock is going much higher after the market closed. They announced their earnings. The growth was really, really good, like 54% top line revenue growth. If you compare the current quarter that was closed versus the same quarter last year, that is really impressive. Overall, this stock has really gone up. I think in the current year, it's gone up like 250% from the low to the high. And let me go 1 year. No, here's 1 year. So if you go from August, you could have bought the stock for $100 a share, and you would have doubled your money since August. So the stock's really flourishing. And one thing that I'm cautious about with Micron, let me show you what worries me about this stock. And it doesn't worry me. It just keeps me from being an investor. That's better stated. So let's see if they got the quarter loaded. The quarter is not loaded yet. So we're looking at the annual. And this will help me communicate my point. First, this is cyclical. These guys do memory. So computers have this, the memory that the CPU, and really you have immediate access to that memory versus storage that you're saving files towards. So now that memory is in high demand because we have a big data center build out. Definitely. But if you look at this historically, we're looking at the last 10 years or so. You see that you have years where they contract, grow, contract, grow. That's typical of semiconductors and microprocessors. You have growth, contract, growth. So at some point, they're going to stop growing. They're going to contract. That's just what happens. Once the build out is done, they don't need much more memory. You're going to see some of that stress on the top line. So that's one thing that I'm cautious about. Second is not all semiconductor companies are put together equally. Nvidia has 70 or 75% gross margins. Let me open that up just to have it as a reference point. And Nvidia most definitely is what great looks like. Nvidia has great growth, phenomenal growth. They're big and they're very profitable. Gross margin 70%, profit margin 53%, free cash flow margin 41%. This is what great looks like. This is great, awesome. Same industry. In fact, Micron, its products run alongside Nvidia. So same ecosystem. Now let's take a look at their numbers. Revenue is good. Very, very impressive for them. This is trailing 12 months. For them to grow at that rate, very impressive. Gross margins. This is where we get to the not impressive zone. And you see that not too long ago, or I should say 6 years ago, 7 years ago, the margins were really, really bad. And they got a little better, but they've never been great. Gross margins of 39.79. And I think that they have higher margins because they've had pricing power because there's been shortages of memory. Profit margin, 22.84. That is very good for their current year. But again, study the history and you see that at times they lose a lot of money because of competition. Free cash flow yield, terrible, 4.46. That's not good. That's not good at all. Now, the main reason why they don't make lots of money on their product is they don't have a proprietary product where, hey, we're the only ones that are allowed to sell this memory. Nobody else can sell it. Instead, you have some really tough competitors. I had looked into this before I started streaming. Micron's technology's primary competitors in DRAM and NAND flash markets. Tier 1, they have to compete against Samsung, which is a massive company. Massive, huge, good run company. And SK Hynix is the market leader. So they got these two big competitors. Now, right now, they're all kind of, they have excess demand. But once that demand shrinks and now you have to compete, you're going to see prices drop. You're going to see margins drop. And they're not dropping from a very high level. They're already kind of low. That gross margin line, I showed it to you. It's not very high. So when that happens, boom, there goes all your profit. There goes all your free cash flow. And the stock's just going to slam down. So they got competition. And that's the main driver of why they're not great. Nvidia, I showed you, was great. Why is Nvidia so darn great? Why can Nvidia keep these super high profit margins? Because they're the only ones that have the patent for this high performance compute, the GPUs. They have patents. Competition can't copy it because if they do, Nvidia will sue them and they will win. because they have a proprietary technology that they created and they earned that patent. They have no competition for that particular category. Our friends here at Micron do not have that same scenario. They don't. They have to compete. They're more of a commodity-based semiconductor company. So that's one of the worries that I have. And again, I keep using the word worry. I'm not worried. I'm not an investor. Let somebody else worry. I'm just pointing out here are the hazards of this stock. Analysts also see this contraction, and they're being quite generous with this forecast. We are operating in this year, fiscal year 2026, and they're expected to grow more than 50%. I think they're going to do it, but then we're going to slow down, and then we're going to slow down, and then we're going to get negative. And if you get too close to these numbers as an investor, I think you're going to lose some money. I think this stock price is really going to go down once the market realizes, oh, you're not going to grow at 50%, 30%. No, we're not going to grow. Actually, we're going to contract. Oh, that's going to be a scary day. And you see how their profits are going to slam down, going down 44%. So this is like, at what point will investors begin to sell their stock? Well, I would venture to guess in the next 12 months, investors will know what's coming and will want to get out early. And if there's any inkling that, hey, there's going to be a sell-off or there's going to be a slowdown for data center purchasing, this one's going to get smoked. So those are the hazards that I see in Micron. It's not my favorite semiconductor company, especially when you can look at terrific companies like Nvidia. I think Nvidia is priced at a discount right now, believe it or not. There's a couple other semiconductor companies that are priced quite great. So those are my comments on Micron. Interesting to see where the company is trading tonight. And, we could, when we saw Broadcom announce 2 weeks ago, the stock traded higher in after hours. The earnings were fabulous, tremendous. And then the next day it sold off and then it kept selling off. So Micron, I'm not going to create a video on this one, probably until tomorrow morning after the market's been trading for 2 hours. Then I'll really know what the market feels like. Hey, the market's really likes Micron. Look at the stocks held at 7.6% gain. But I would not be surprised if it follows the same motion which Broadcom had. They announced stock went up in after hours. Then the next day it crashed. It's like, whoa. And Nvidia had a similar fate. Nvidia announced absolutely amazing earnings. Stock sold off. So we'll give it 18 hours or so. Then we'll know. Hey, is Micron going to hold? Is Micron going to hold these gains? We shall see. Interesting day in stock trading. It's always interesting and it's always fun. All right, so that's Micron. Put that off to the side. We're going to go over to Rocket. Let me check in on the chat. Make sure I'm keeping an eye on things. Michael, good to see you. Kevin, thanks for joining. I think we're good. I think I covered all bases there. Rocket companies, these guys are, as mentioned earlier, a mortgage company, real estate, that kind of thing. And they are sitting in a good spot right now. Now, I wouldn't have said that a couple of years ago when interest rates just kept going up. Nobody was refinancing. Are you kidding me? Nobody wants to refinance and get a higher interest rate loan. So they were really struggling. But I think with lower interest rates and the expectation that these rates are just going to keep going down is going to really help Rocket, I think. And we have interest rates already coming down because the Fed lowered them here recently. And it's pretty much a given that the Fed's going to lower rates over the next year or two. So that's going to help Rocket. That's going to help them. $51 billion market cap company. Year to date, there we go, 61%. The market sniffed it out, saw it coming, and it took the stock from $11 a share up to 18. Good move. If you're in this stock, congratulations. You're doing well. You're doing well there. Now, this is when interest rates are actually climbing. This stock was just selling off. Now, for a while, they were kind of like not going anywhere. And then we had some kind of rally here. Maybe interest rates were beginning to drop, and then it crashed. And now we had this more recent run up. Now, I think this is going to continue. I think it's going to be a good business for a couple of years. The dividend is a 4.41% dividend. Not bad. Not bad at all. Forward P 27.44. Let's take a look. See, here's the contraction when interest rates were going up. Nobody wanted to redo their loans. Are you kidding me? But you're going to start seeing some real fast growth numbers because now a lot of people want to refinance. They want to redo their loans. They want to do a new loan and pull out some cash so they can, add a room to their home or, buy another property or do something with it. Send a child to college, that kind of thing. Looking at their forecasts, here we go, 72% growth next year. That's what I'm talking about. That's why the market's bidding this stock up. See this beautiful number? Whew, man, 72%. And that's going to make the business much larger. It's going to expand the profits. It's going to triple the profits. Look at that. Incredible. And it's going to bring down the PE ratio. Now, this stock's a little bit kind of investors that acted quick took advantage of this. Good for them. It's also a stock that is, you got to be careful when you model it because you can't model this expecting, they're going to have a consistent growth rate for the next 10 years. No, it's going to be all over the place. I mean, you see the revenue grows and then contracts. It's a harder business to model, to predict, to forecast. But if we look at the trailing 12 months and let's see what kind of cash flow they're generating here. So they have negative cash flow. Interesting. Why is that the case? So they're just working off transactions. That's why the gross margin is 100%. But so far, they're not making money. They will eventually make money. But it's interesting, these numbers are not all that great. They will be eventually. It's all, I think, speculation from investors saying, hey, this is the market for mortgages is going to be better. I agree. And they invested in this company knowing that. So far, so good for investors. They're up 61%. That is a very good situation for investors. So rocket companies can't do a valuation. They don't have free cash flows. They don't have profits. Let's take a look at their balance sheet. They're carrying some debt. Temporarily, these guys are writing a lot of loans, and they do have to carry the loan for like a short period of time, and then they sell it off. An organization like Rocket being that big, literally they will only hold the loan for like a day or two. So they have some working capital. So they're able to do that. But very quickly, they're selling it off to somebody who wants to own that debt. That's how they operate. Now I'm curious. I've been asking Gemini some questions. I'm going to ask, what are the financial metrics at what kind of business is exactly Rocket? Profile, mortgage finance company. So I'm asking Gemini, what are the metrics that I should be looking at when I evaluate a mortgage finance company? So price to book, that's what we would use for a bank. A dividend yield, okay, that one's easy. Price to earnings, got it. And then price to funds from operations. Okay, that's for REITs. So it didn't give me a whole lot. Now the book value, we can look at the book value. Let's go take a look at that. It's going to be on your balance sheet. And let's see if the book value has been growing or if it's been going up and down. So book value per share, you see that it went up and then it came down. And now it's growing again. So the book value is growing. But I wouldn't agree that we want to value it based on book. I think it's a transaction-based business. And I think earnings per share is probably going to be the best barometer, the best metric. And then keeping track of their revenue and seeing how they're going to continue to grow for the next 2 to 3 years. Man. Paul. Instacart shares plunge 11%. Got to look at Cart. What's going on in Instacart land? We'll take a look at that. I put it on the list. All right. So TPL is the next stock. Let's take a look at TPL. Oh yeah, this one went up a lot. 7.59. These guys basically they have land resources and they in essence lease out the land to oil companies and they receive oil and gas royalties. So they own the land, oil prices go up, they're going to get bigger revenues because they get like a percentage on the oil that is extracted from their land based on per barrel prices. So if oil goes up, these guys make a lot more money. I own energy. I own Chevron, Occidental, EQT that's more focused on natural gas. And this one is not one of my investments. It's done really well for the 5-year because I think it was priced so low before. Now it's done good overall. Man, look at that. Incredible. Pays a small dividend. Year to date, it's been really sold off. Today I had a really good day. Continues to go higher. Forward P is a little high. Looking at their financials, you see how this is up and down. A lot of up years, though. There's a lot of green on the screen. They might be acquiring more land, leasing it out, having greater portfolio of land that they own. Looks good. Been growing. This is a lot like a real estate investment trust. And I wonder if this is like one of those partnerships that if you want to be a stockholder, you actually become a partner. So let's take a look. The Texas Pacific Land Corporation engages in the land and resource management, water services, operations business. The land and resource management segment manages surface acres of land and oil and gas royalty interest in the Permian Basin. Okay. Okay. It doesn't seem like they just issue out common stock. Okay. I know that there's some companies like the pipeline companies, they're like a partnership. So if you buy shares, you're treated like a partner, and then there's distributions at the end of the year, different tax treatment, and they're a little complicated, I would say. These guys, it doesn't seem that they have to follow those rules. So this one here, pretty simple business. If oil goes up, their stock's going to go up. If oil goes down, their stock's going to go down. They own the land. They're not, taking care of the operations and so forth. They just own the land. So Real good day for Texas Pacific Land Corporation. All right, so Instacart. So I do have shares in Instacart down 8%. So they have an AI pricing tool, and I think the accusation is that it doesn't fairly price the product. And I wonder if they have like surge pricing like you have with Uber. Like if you just get out of a football game, right? 100,000 people or 50,000 people are generally leaving the stadium at the same time, and you try to catch an Uber, it's going to be expensive because there aren't enough drivers, there aren't enough cars, so the pricing goes up. So is that kind of treatment being applied here where, hey, you're ordering groceries when it's really busy, and in order to compensate the driver, the delivery guy, the prices go up? That could be going on. That might be the case. I don't know. I'm holding a position in Instacart. They tend to sell off on stories. Like before this, it was Amazon's going to start delivering or do more deliveries from their grocery stores because, Amazon owns Amazon Fresh and Whole Foods. And that became a threat. I think it is a legitimate competitor, but I think that Instacart's going to do fine because they partner with Kroger and they partner with Costco. And I think they can handle the delivery, and Kroger and Costco can handle being really good operations for grocery and other items. Costco especially, they have a lot of consumer based products. So it's interesting story. We'll see what it does to the stock. It has not been a good performing stock. It's up 10%, soon to be much less than that. If you decrement that 7%, we're down to a 3% rate of appreciation in a year that's been fabulous. Over the 5-year, again, not as good as it should be. $12 billion market cap. Forward P is 21.32. And what's the forecast call for? These guys, it's expected they're going to keep growing. That looks good. And profits are going to expand nicely. That looks really good. Getting their PE down to single digit. That's really, really a low price stock, considering that they continue to grow. Now, they got to grow faster. One thing I would complain about is they're not that big and they're not growing that fast. So I'd like to see them grow faster. If they can grow faster, they're going to be fine. If they can't grow faster and they actually start to slow down, big problems. Big, big, big problems. They don't have, a variety of services they can provide where they can grow in other areas. So we'll see how things play out. When's their next earnings? Their next earnings is November 10th was their earnings that just passed more than a month ago. So it's going to be early February when they announce again. Now, Maple Bear is discounted as a stock. And bear with me. Okay, so Instacart discounted 53% because it just drives a lot of cash and profits. But the market may not care that it's discounted. It really pays attention to some of these stories. And some of these stories are quite real, but some of these stories are very, very fictitious. And now the pricing, I don't know that they're doing anything illegal with the pricing, but we'll see. We'll let them figure it out, explain what they're doing, and make sure they're doing things right. In the meantime, I'm going to hold a small position, and I actually sold some shares in Maple Bear today. Guess it was lucky or fortunate of me. Kind of forced myself to thin my portfolio a little bit. I sold a couple of positions all out, and Maple Bear, I did sell some shares. So those shares are going to be shares that I'm glad I sold because it was up quite a bit more earlier in trading. See how the stock ended today, slightly higher, but it was trading up here. And I thought, I think I'm going to create some cash today. Maple Bear and a couple of other stocks were on the list. And I think I sold out of Maple Bear. I sold some shares. I sold some shares out of another stock. And then I sold 2 positions completely that I didn't think were strong enough. So made my portfolio a little more focused, a little more concentrated. And now I've got capital to work with as we have stocks selling off. Nicholas, thanks for coming in. Has Tesla changed my conviction of Uber? No. I think that the Uber story, how long has Uber been operating? Let's ask Gemini. And the reason I want to know is I want to make a point. Over 15 years. Now, you build the customer base and you build the brand and you build what I would think would be consumer patterns, consumer comfort over a long period of time, 15 years. Now, when Tesla brings out their robotaxi business, and I don't know when that is, and I don't know how many cities. I mean, Tesla talks a mean game, but one thing they've been consistent about is being late on everything. Every product, just look it up. They're always late, 2-3 years. And in this whole mobility market where you have Uber, Lyft, and you have Waymo from Google out there, that's the leader of robotaxi right now. But you also have other businesses like Neuro. You have other businesses coming out of China that are going to compete. Nobody has a bigger customer base than Uber. Uber has the highest number of users on how many? Let's ask how many users. How many monthly users does Uber have? Uber has 189 million monthly active platform users. 189. Whew. Let's ask how many does Waymo have? So 189 million users. And they're not telling us how many users they have. Instead, they're going with rides, 450,000 weekly. So they're estimating 200,000 monthly passengers. And that's not, I mean, it could be the same passenger that rode 10 times. So where I'm alluding to is building a business where 189 million people are very comfortable. It's almost like they don't have to put any thought into it. Hey, I'm going to call an Uber. Let's say you landed in Chicago, Midway Airport, and you're like, hey, I'd like to catch an Uber, get me over to my hotel, or let's say you're staying with a friend, get me over to that address. There's no thought you have to put into Uber. It's easy, it's fast, it's proven, all that stuff. That's the advantage. Tesla talks a mean game. They really do. But let's get it. They first have to launch the darn thing. Then we can see how competitive they are. Waymo has been around for a long time, and they only have a few, compared to Uber. Waymo's doing 450,000 rides per week. I think Uber does billions of rides or something like that. Let me ask. I've asked before and I forgot the number. And what's really cool about AI now with Gemini, ChatGPT, Grok, whatever you want to use, I used to have to go poke around, do a couple Google searches, get to a website, download a little bit of information and all that jazz. And now forget about it. Just ask Gemini and it does it for me. That is cool. So these guys are doing 269 million trips per week, where Waymo's doing 450,000. So 450, they're not even doing a million. So Uber's so much bigger than Waymo, and Tesla officially has 0 rides per week that are robotaxi. They're testing. They have a co-pilot human being in the car. And I think they're testing just to get data and so forth, I believe in Austin. So they're not even operating yet. So is Tesla a threat to Uber? No. But I think the market will always treat, or I should say, the Tesla will always get the benefit from a good population of investors. And, that's reality. I don't invest in Tesla. I like to see, facts and figures and numbers to prove that a business is operating well. I owned Tesla a long time ago, and it was when everybody was really doubting them. And I did buy shares, and the shares did do well. But after a while, it was like, God, man, this company just doesn't really, doesn't have the characteristics that I want in a business. So ever since then, I haven't been a Tesla stockholder. All right. So that is Uber. We talked about Instacart, Uber. We got that all locked in. All right. So let's take a peek and see what the market's doing at after hours. See if we got a little sell-off going on. So futures are supposed to rise a little bit. We are, So this happened in DC. So U.S. Army is admitting that their pilot of the helicopter made a mistake. Okay. All righty. So where did I want to go? I wanted to go here. So we have a 2.5% sell-off. When's this thing going to turn around? Not sure. But what the market's showing is that the market is okay rotating. I don't know if this rotation is going to stick, because I've seen this before. If we look at let's look at the monthly. Not quite there, but it's getting there. See how Nvidia is down 10%. If we're starting to see this kind of in the 3-month, like the rotation is really stuck, then I'll believe that the rotation is in. But it could also be an opportunity for investors that wanted to be in Nvidia to buy, or Broadcom, and they're selling off. But there's also some people that are feeling like, okay, I've got a good price. I think I'm going to buy the stock. So that could be also occurring. All right. So I think I caught up on that. So what other stocks did you guys want me to take a look at? As you think about it, let me tell you about the community that I've got going here. And all you members out there, thank you so much. I hope you get a lot of value from being a member. Just to give everybody else a tour, you could be a value investor member, $10 a month, come on live streams, put a stock down. We can take a look at it. You could get access to some videos that are produced for value members and everybody else. Um, when you go to an advanced investor level, there's more videos that I create for advanced investors. Like I did a materials best and worst video. Advanced investors get to see it, and anybody else above that level, because each level you get to do everything that the previous or level has. Advanced members also get access to Discord, member calls, the tools that I use to evaluate companies. You get that at the advanced member level. So I think that's a pretty good membership there, and I think you get a lot of value. If you want more access to what I'm doing actively with my portfolio, super investors get access to videos made for them where I'm sharing my trades and what I'm doing with my portfolio, and also a 30-minute call once a month and other things that come to super investors. Then platinum investors, they get everything listed here plus 3 stocks a month. I fully research those stocks and get those out to the platinum investor. And so take a look, see if one of these levels is the right one for you to help you become better, to study my research, to learn, to interact with other investors on Discord. There's a lot of stuff there that I hope current members get a lot of value from, and hopefully future members get lots of value from as well. All right, so don't think I saw any other requests, so let me go ahead and shut it down. I wanted to stream a little bit. This has been a really busy week for me. It's like the big sprint going into the holidays, and it's not going to lighten up for me for another week. So I wanted to stream because I don't know if I'm going to be able to stream tomorrow. So I wanted to get a stream in the evening, because there's a good number of people that like tuning in the afternoons/evenings, and I wanted to do that. So I'll try to stream tomorrow. I can't promise anything because it's going to be a busy day for me tomorrow. And if I don't get to stream tomorrow, maybe Friday or Saturday. But we'll see. We'll play it by ear. And thanks a lot for tuning in. We got a good number of people tuning in. Paul, great to see you. Good to see you on the member calls. Benton, great to see you. Thanks for asking about the company that you asked about. Genetic Smite, thank you, sir. Shadow Guy, have a nice evening, sir. And that is it, folks. We'll keep it short and sweet this evening. You guys take care. Good luck with your investments. And don't let this sell-off discourage you, okay? Sell-offs are an opportunity. Remember that. Sell-offs are an opportunity. If you loved a business and now you get a price that's 5-10% lower, what's wrong with that? It's time to buy more shares if it's a great business. So that's how I'm treating this sell-off. It's not oh no, my portfolio is down a little bit. Yeah, of course, that's the case. But where are stocks that I really want to buy into? And I created a video today for super investors where I shared the stocks that I laid out some capital into. I took some capital out of some stocks. It's the time to do that. It's not a time to freeze and stop researching and analyzing, making good decisions. It's a time to actually lean into it. That's my feeling about it. All right, guys. Well, have a terrific night. And again, good luck with your investments, and I will talk with you soon.